Welcome to the deep dive. Today, we're really digging into HDFC Asset Management Company, HDFC AMC, looking at their year-end results, March 31st, 2025.
Right, and we've got quite a bit to work with here. Board meeting outcomes, auditor reports, the earnings presentation, press release.
Yeah, even some bits from their earnings call. So the plan is, let's get past the surface, really understand the financials, the dividend news, and this new ESOP scheme they're proposing.
Absolutely. So starting with the big numbers, the financials for FY25, what really stands out, I think, is just the scale of the growth.
Oh, definitely. I mean, revenue from operations,
Right.
what was it? 34,980 million. That's like a 35% jump from last year. Huge.
It is. And operating profit, even more impressive, really, even at 27,261 million. That's up 43% from FY24.
Wow. So not just top line growth, the profitability is climbing fast too. Even profit after tax up 26% to 24,609 million. These aren't small steps.
No, not at all. And what's telling is the efficiency behind it. If
Yeah.
you look at the operating profit margin, it's 36 basis points of their average AUM for the full year.
Okay, 36 basis points.
And it actually nudged up slightly in Q4 to 37 basis points.
So just quickly, basis points, that's 1/100%, right?
Exactly. Yeah. So that little uptick suggests they're getting, well, more efficient even as they grow bigger, which is always good to see.
And that efficiency, I guess, flows through to shareholders. Which brings us to the dividend, right? They've recommended €90 per share.
Yeah, up from 70 last year. It's a pretty significant increase. Face value's 5, just for context.
And looking at the payout ratio,
Yeah.
78% of realized post-tax profit. That's quite high.
It is. And they actually mentioned on the conference call, they basically said they practically distributed the entire realized post-tax profits this year as dividends.
Really. So that's a very clear signal, isn't it? Returning cash to shareholders is a major priority. Almost makes you wonder if they feel they don't need quite as much for reinvestment right now.
It's a strong statement, definitely. Now, moving to the core business assets under management, AUM, the numbers here are just massive.
Right. Total closing AUM hit 7,545 billion by March end. That's billion with a B, up 25% year on year.
And the quarterly average, the QAUM, which kind of smooths things out, was even a bit higher, 7,740 billion, also up 26% year on year. It's huge scale.
And where is that money mostly sitting? Equity seems to be a big chunk.
It is. Equity-oriented AUM was 5,040 billion at closing, which lines up, with the overall market trend. Equity was about 56% of industry AUM in March, so they're clearly capturing that investor interest in equities.
And they seem to be leading the pack in certain areas. Market share overall, QAUM-wise, is 12.8%. Even take out ETFs, it's still 12.7%.
Yeah, solid numbers. But where they really shine, it seems, is actively managed equity. Also 12.8% market share there. Suggests their fund managers are doing something right in the eyes of investors.
And they're not just an equity shop either, right? Strong in debt, too?
Yep, 13.1% market share in debt QAUM and 12.5% in liquid funds. So fairly well-rounded.
What caught my eye was the point about individual investors. They have a 13.2% market share of individual monthly average AUM.
Which is significant because individual investors make up, 60% of the industry's total AUM on average?
Right. So HDFC AMC seems to punch above its weight with retail investors. They've clearly built a lot of trust there. Why do you think that is?
Well, it could be a mix of things, right? Brand name, obviously, maybe their distribution reach. Performance probably plays a big part, too, for individual folks.
Makes sense. And speaking of individuals, the SIP Flow's systematic investment plans, still looking very strong.
Yeah, remarkably so. Okay, there was a tiny dip in March, 259 billion, down from a record 265 billion in December.
But the CEO on the call kind of brushed that off, didn't he? Called it just a 2% dip on a base of 26,000 cores plus.
Exactly, putting it in perspective. And year on year, SIP contributions were up 35% in March. That's strong growth.
It really is. Shows continued confidence even if markets get choppy.
The company thinks so, too. They mentioned it reflects growing maturity, confidence, and long-term orientation of Indian investors. Seems like SIPs are really ingrained now.
And it's not just the value, but the number of transactions, too. Up 24% year on year in March. So more people doing it, or people putting in more, or both.
Probably a bit of both. Now, shifting gears slightly, let's look at the people side, this new ESOP and PSU scheme they're proposing for 2025, subject to approvals, of course.
Right. So what's the plan here? They're setting aside 2.5 million equity shares.
Correct. Face value 5. And up to half of those can be performance-linked stock units, PSUs.
Okay. And this means they're canceling some older options.
Yeah, about 873,000 ungranted options from a 2020 scheme are being canceled, basically tidying up and moving to this new structure. No more grants from the old one.
Got it. So how does this new scheme work? The vesting looks interesting.
It does. For the regular ESOPs, it's deferred. So 10% vests after year 1, then 20% in year 2, 30% year 3, and the biggest chunk, 40% in year 4. So clearly designed to encourage people to stick around long term.
Exactly. Long-term retention seems the goal there. And the PSUs, the performance-linked ones, they vest differently.
How so?
Well, they depend on hitting financial targets for the company and also individual performance goals. And the vesting is even more backloaded, nothing in the first 2 years, then 30% in year 3 and 70% in year 4.
Wow, 70% in the 4th year. So that really ties rewards to longer-term results.
It certainly does, but here's a really interesting bit, I think.
What's that?
Who doesn't get the PSUs? The MD and CEO and all their direct reports, the heads of departments, they're not eligible for these PSU grants.
Oh, really? That's quite a statement. So the very top leadership is excluded from the performance units.
Seems so. It suggests they want to focus those performance incentives maybe more broadly across the organization, not just concentrated at the absolute top. It's a notable governance choice, you could say.
Definitely something to think about. Okay, moving on to how they actually reach all these investors. Their distribution network sounds huge. It is. Over 95,000 partners, MFDs, national distributors, banks, and they support this through 280 offices.
And a lot of those offices are in smaller towns, right? The B30 locations.
Yeah, 196 out of the 290 are in B30 cities. And it pays off those locations, bring in 19.1% of their total monthly average AUM.
Wow, nearly a fifth. And they call themselves the #2 player in B30 markets.
Right. So clearly, penetrating beyond the major metros is a big part of their success. It's a key growth area in India, isn't it?
Absolutely. And like everyone else, they're leaning heavily on digital.
Oh, yeah. 94% of transactions processed digitally. That's very high.
And their app seems popular. Good ratings, you mentioned.
Yeah, 4.6 on Android, 4.7 on iOS. Plus, they're seeing big jumps in logins, 35% more customer logins monthly, 22% more partner logins. People are using the digital tools.
Okay, so beyond the core business and distribution, what about new strategic directions? Anything interesting happening there?
Well, they're definitely pushing into alternatives. They closed their first AIF fund-to-fund, that's Alternative Investment Fund, got over 400 investors for that. And they're launching a Category 2 credit fund, too, called the CFCMC Credit Opportunities Fund.
And they're putting their own money in.
They are, committing 10% of their own capital to seed both these funds, which is, real skin in the game, shows they believe in it.
Right. And any international moves? You mentioned Giftiti.
Yes. Their subsidiary there, HDFC AMC International IFSC Limited, went live with funds in Q3 of this past financial year. They say the initial response is good.
And the goal there is
What?
attract global money into India.
That's part one. And eventually also allow Indian investors to invest globally through that platform. So it's kind of a two-way street they're building.
Interesting. Potential for new growth there. And finally, M&A. Mergers and acquisitions.
They mentioned it, said they've got a healthy cash position and they're open to looking at strategic M&A opportunities if the right ones come along to speed up growth or strengthen their market position. So keeping their options open.
Okay. So let's try and wrap this up. If we boil down this deep dive on HDFC AMC's FY25, what are the main takeaways?
Well, first off, really strong financial performance, good growth in revenue, even better growth in profits. Shows efficiency.
Right. And the big dividend hike, clear sign they're focused on shareholder returns, 78% payout.
Yeah. Then there's the AUM story. Massive assets, strong market share, especially holding on to that lead in active equity and connecting well with individual investors.
That retail connection seems key, and the SI holding strong reinforces that.
Definitely. Then the new ESOP scheme seems aimed at long-term retention, and that exclusion of top brass from the PSUs is quite noteworthy from a governance angle.
Yeah, interesting decision. Plus, their continued success in B30 markets and the big push into digital.
And finally, the strategic stuff. Building out alternatives, the Gift City presence for international links, and keeping the door open for M&A. It suggests they're not just resting on their laurels, they're looking ahead.
Okay, so lots to digest there. Here's maybe a final thought to leave people with.
Go for it.
Given how much HDFC AMC relies on and succeeds with individual investors and how resilient those SIP flows are, how much do you think the growing financial knowledge and sort of changing habits of Indian retail investors will actually shape where the whole asset management industry goes next?
That's a great question. And maybe tied to that, as they push into these newer areas like alternatives and international markets, what kind of new opportunities, but also maybe new challenges will they face trying to diversify beyond their traditional strengths?
Yeah, exactly. Things to ponder as we watch how HDFC, AMC, and the broader industry evolve. Good stuff to keep an eye on.